China to replace Aussie Iron Ore. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee because this is an interesting article looking at the potential risk or concern of China to punish Australia through Brazil by replacing our iron ore. Well, because we're the biggest exporter of iron ore in the world, and let's have a look at that market. Right now, the iron ore price, when I screenshot of this, is at 197 USD a ton. Our government has set the budget based on a $50 USD per ton of iron ore to determine the royalty. So it's doing pretty good. Now I'm hoping this high iron ore price and the high coal price as well will lead to more capital expenditure on these iron ore mines and coal mines, and that will lead to more work and will flow through the economy. And that's purely based on my own experience as an architect who's done a lot of work on projects out in the mines. When the price was higher, capex went up. They needed to attract better workers. They made better conditions and facilities. So we'll see if that manifests. So it flows through, guys. Don't think it doesn't. You're watching someone who started my business based on large international Bechtel established mines. So there you go. It's a good thing. We'll see how it goes. But of course, let's have a look at the market. Its complexity isn't there. It's 928th in the world with regards to the complexity of products. We're the top exporter. The top importer is China. You can see here number 2 is Brazil. Brazil's exports have been reduced because of a flooding incident there, which hampered their capacity. China is the biggest importer of iron ore by far. By far. You can see here, we've grown substantially in the last 10 years, but we've been right up there. You've got India and South Africa and Brazil. Here's the net iron ore trade. You can see the exporters in blue, and in red are the importing countries. China's just, leading here. And these are the tariffs. So 4 to 40% tariffs in in Mongolia and Saudi Arabia and a few other countries. So it's just interesting to see what tariffs exist. So let's have a look at this and see if we should be worried, because iron ore is a big part of our economy and, it's a big part of the Western Australian economy too. So tensions are at an all-time high, but China is still dependent on Australia for all exports. But this is one nation it hopes can end it. China may have shunned Australian lobster and wine, but there's one commodity it just can't go without: iron ore. The last 12 months have seen the country more dependent on Australia's biggest export than ever before, thanks to an increase in Chinese steel production, as well as disruptions to Indian and Brazilian iron ore supply. Australian iron ore is now worth more than $210 per ton, compared to $60 this time last year. But the current boom in Aussie iron ore exports to China could be under threat, with Beijing now pressuring Brazil to get its production of the commodity back to full speed, the Australian Financial Review reports. Brazil's iron ore production has been impacted by a series of accidents, and coronavirus-related shutdowns of the country's biggest mines have hit the industry hard. In the mid-2020, some of the country's biggest iron ore mines were closed after COVID-19 cases exploded among workers who work in closer contact and more labor-intensive roles compared to overseas mines. Meanwhile, the iron ore price has skyrocketed. It was about Australian $271 a ton today. And this article's from a few days ago. China is also pushing forward plans for an iron ore mine in Guinea to be built in the West African country's Shindao mountain region. The untapped resource, which spans 110 kilometers, is being touted by Beijing as one of the best ways to lessen its reliance on Australia's iron ore supply. It's a reliance that Beijing wants to end quickly, but both solutions have one downside. Australia's doesn't. Distance. You can't tow West Africa or Brazil any closer to China, one mining executive told Australian Financial Review. China's reliance on Australian iron ore, which has resulted in massive financial windfalls for our biggest mining companies, have come despite trade tensions between the two countries at an all-time high. In a monthly briefing released this week, China's National Development and Reform Commission called on companies to widen their sources of imports, look for overseas iron ore resources, as well as increase domestic exploration for steelmaking input. According to Chinese state media, NDRC spokesman Xin Zhendong blamed Australia for damaging trade relations. Of course, it's always the Australians' fault, guys. It's always the Aussies' fault. Consequently, we have to make the legitimate and necessary reaction, and Australia should bear full responsibility for such moves, he told the conference. We urge the Australian side to treat China-Australian cooperation objectively and reasonably, to treat Chinese companies fairly, and end the disruption of bilateral trade and investment cooperation, and take actions to bring forward bilateral relationships and healthy development. But despite Australia and China's icy relationship, an outright ban on iron ore is almost unimaginable. Instead, Beijing could resort to other tactics to make the export of iron ore more difficult for Australian companies. Energy research and consultancy firm Wood Mackenzie told Bloomberg earlier this month. While an outright ban would be almost unimaginable, various forms of restrictions, delays, or increased administrative burdens on Australian iron ore imports could yet happen, Woods Mackenzie warned. Chinese steel production is at an all-time high, with the industry growing at 14.4% on an annualized 3-month basis, according to figures from Westpac and Bloomberg. The country depends on our quality iron ore for around 2/3 of its imports, and all but one of the biggest exporters to China are Australian mining companies. So, I mean, there you go, everyone. What's the solution to this? We've been hearing all of these issues about trade for some time. A lot of fear-mongering in the media, a lot of saber-rattling coming from China and from Australia. Well, what can we do about it? What are the solutions here? Now, I've copied my solutions here, and I'm just going to delete the first one. Just ignore the dependency on property. Well, I mean, that's a given. But we need to look at special economic regions to reduce government intervention and explore other global opportunities to help facilitate the expansion of our iron ore industry and look at other destinations. It's already happening, guys. You know, there may be a bit of saber rattling, but shipping it from Beijing, from Brazil over to China, shipping it from Africa, there still will be competitive advantages we have. Are you worried? I'm not really. Let's have a look. Let's keep an eye on it, everyone. As always, thanks for watching. Let me know your thoughts and opinions on this one in the comments down below. Have you invested in any Australian iron ore companies? What's your favorite? Do you think their shares will take a hit, or it's just more, water under the bridge? It'll all be good. As always, thanks for watching. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. Support us by signing up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or Broadband. Buy our merch from HeiseSays. Use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I'll see you next time. Bye for now.